Hello traders, welcome back to the channel. So today we are going to be talking about two pairs, that is USD CAD and USD CHF. These are two pairs that tend sometimes to move alike or move the same, or they have a positive correlation. So we are going to be talking about them. And someone told me I always should be doing in the comment section weekly analysis or daily forecast. I don't think I can manage the daily forecast because I'm very busy, and I told you guys I'm a swing trader. So what I can do, what I can be doing is a weekly analysis or weekly forecast, such that I can give you the hints on what we expect in going into the next week, and then from there you guys can decide what to do. You can decide either to be following the setups, waiting for them throughout the week, or you can use the same analysis, replicate it into the daily, because if I'm doing that, I'll be doing from the weekly. As you can see my time frames on my chart, I'll be doing from the weekly to the daily to the 4 hour, sometimes even the 1 hour. But you can just replicate the same analysis to the lower time frames, people who are day trading. So today we're going to be looking at USD CHF and USD CAD. The analysis is going to be done from the weekly time frame, dropping down to the daily and the 4 hour. So without further ado, let's proceed to the analysis. But however, you guys have to subscribe to the channel. People who have not subscribed to the channel, we are on the road to 600 subscribers, so far at 500. So if you're watching our videos and you're getting value out of them, kindly subscribe to the channel, because currently we have a lot of viewers but a few subscribers. So guys, subscribe to the channel and be part of this growing community of like-minded traders. So let's proceed with the video. Oh, don't subscribe to the channel, guys, if you have not found value from the content. Only subscribe to the channel after watching the video and finding some value. Subscribe to the channel. So let's proceed now. So I'll start with let me see. I'll start with USD CAD, USD CHF. Let me see. There's something I wanted to start with, and I was seeing this yesterday, so I'll just clear everything here. So I think I'll start with USD CHF. I'll start with USD CHF, and then I'll follow with CAD. Okay. So what we have here is USD CHF, and this is the weekly time frame. So what you see on the weekly time frame is something that is very interesting. You see the price was going down, then made a low, then made a high, and then left a demand zone here and made a low. So after making a low with this demand zone here, price then came after 1 2 3 4, after 4, I think after 4 weeks, that is 1 month, tested into this weekly supply zone. Sorry guys, those things confuse me. Weekly supply zone, and then dropped. So it has been dropping since then. However, in that drop, there has been another supply zone created, but it is hidden. But this is the weekly time frame. When you mark it, you'll see it on the other time frames like the daily. So which zone has it created? So you can look at this one here. You have an evening star candlestick pattern. People who don't know about candlestick patterns, please go and learn about them, because they will help you a lot in trading. You will see it somewhere and you definitely get an idea of what you're supposed to do. So price made an evening star candlestick pattern. This is where you see a green candle, an indecision candle, and a red candle that is overlapping the previous two candles. This is a green candle, indecision candle, and a red candle overlapping the previous two candles. Note this one is not clear, but I'll show you in the example for USD CAD. And then if you don't see that well, there is this one here. There's a green candle going up, and then there is an indecision candle in the form of a hammer, inverted hammer, and then there is an engulfing candle or a red candle that is closing below this. Actually, let me even start with this one and I'll show you what exactly happened here. So there is a green candle going up, and then there is another green candle that goes up but closes as a hammer, showing you that price went up here. However, there was a lot of sellers pushing price to the downside. A lot of sellers pushing price downside. This candle closed as a hammer. So after that, you saw an engulfing candle, marabuzu engulfing candle, showing that there's a lot of sellers in that area, meaning the next week is likely to sell. However, if it is going to sell, where is it going to sell from? Do we just enter sell because this candle has closed as a bearish engulfing candle? No. Where is it going to sell? It is going to sell from the previous supply zones that was left when this candle was forming. So the immediate zone that you will see after that engulfing candle is this inverted hammer candle. You see that inverted hammer candle? You're going to mark it well. So after marking it well, then you'll drop down to the daily time frame or one time frame below. So after marking it well, you drop down to the one time frame below and look to refine the supply zone. So in case of this one, I'll refine it to the closing price of that red candle, and then refine this to the high. Sometimes I can use the high, the wick, or the opening price of this red candle, but I think in this case I use the high, which is the wick, to mark that zone very clearly. And I want you to see what happened is the price dropped up to here, and the next week, let's just go and mark the other. Let's go back to the wick and mark the other candle of the next week, which is this one here. This is now the candle after the engulfing candle. So this is the candle or the wick we're looking to sell from. So you've just marked that candle. So when you drop the daily, look at what happens. After the engulfing candle closed here, the next week opened from here, price started retracing. After retracing, it tapped into our zone. After tapping into our zone, it dropped massively. So this is where we sell from, this area here. This is where we sell from. Price will come, retrace, because we know that it wants to sell. Why? Because there was a previous tap into the weekly supply zone, and also there was a weekly bearish engulfing candle and a marabuzu for that matter, a weekly marabuzu. Guys, that candle is powerful, and if it is on the weekly time frame, it simply shows you that the selling momentum is very high. So what you want to do is to go to the daily or the 4-hour and look, and I'm going to refine up to the 4-hour and look for areas to sell from. When you get that area, now you enter your sales, and the target is the previous low, which is here. This one, it should be your first level target, and then let the rest of your positions run. So it will roll up to around here. That is around 420 pips. A 1:5. Guys, you're risking $80 to make 500. You're risking $800 to make $5,000. You're risking $5,000 to make $50,000. That is a lot of money, guys. It is a game of risk to reward. So this one now, it is on the daily, and we know you cannot enter the daily. Why? Because you don't want to risk obviously $80. So you drop down to the 4-hour. The lower the 4-hour, the lower the pip count. So when you drop down to the 4-hour, what do you see? Let me just stretch this. So when you drop down to the 4-hour, what do you see? This is what you see. The 4-hour, this is what you see. You see that price came, and this is even more beautiful on the 4-hour. Why do I say so? Because there was this demand zone here. Very good demand zone with a jump. Remember what I told you about demand zone with a jump? It's a very good one. Price came, retested it, and went up, but it did not go far. Price came back, retraced, and then dropped, breaking this demand zone, and also broke another demand zone down here. Where is there is my pencil tool? Where is it? It is called what? Let me just search for it here. It is called pen, something pen. Where is it? Pen. Yeah, this one here. So it has come. So let's go back to the charts. This is it. So I think I can just drag it to, let me remove this one here and drag it there. Here, will I be able to put it there? It is not going. Okay, let me just leave it there, guys. So now what is happening is, if I could just use my pen tool, you see this demand zone here, this one here. I think I should use black. Where do I change from? Click on this one. Good. So I'll just bring the rubber tool and erase this one, and then come back with my pen. So this is the area here. You see this area here? This is the demand zone. This is the demand zone that price was supposed to react from. So price reacted from this zone perfectly and then bought to the upside. After buying, it did not go far, it did not even reach this high. It came back and started retracing, breaking this demand zone, and also broke this demand zone here, going to the upside. Continued further to the upside, showing that it has now turned into the downtrend. Price has now turned into the downward trend, and it is no longer in an uptrend. But how did you get to know that? From the weekly time frame. So where are you looking to sell from? Now that the weekly has told you that you are likely to sell, because there was a weekly bearish engulfing candle, so it simply shows to you that you are likely to sell than buy. If you continue the daily, you would be looking to buy from this area, yet the weekly has told you that we are selling. So you'll come back to your area and look for supply zones around this area here. Look for supply zones around this area and then sell. Remember, we marked this from the weekly hammer, the weekly rejection. So this is the price action on the 4 hour, but it's a weekly hammer rejection. So you're looking for supply zones around this area, valid supply zones only. And now, this is why I always tell you that it is always good if you have those paid plans, because if you have a paid plan of TradingView, that means you're going to be able to access the 6 hour. You're going to be able to access the 6 hour time frame here. Now we have to get a valid zone. On the daily, we have a zone. Let me just show you on the daily. On the daily, we have a zone. It is there, marked very well on the daily. When I come to the 4 hour, I don't see the zone. When I come to the 4 hour, I don't see a clear zone to refine in. You see that? So I'll have to drop to the 3 hour and see if I can see a zone to refine from. When I drop the 3 hour, the zone is not clear. However, there is something I see here. There is something I'm seeing here on the 3 hour. I would refine it to this one here. You see? That one there on the 3 hour. So on the 3 hour, the zone is refined, and you can see a very good move. 1, 2, 3, 4, 5 good red candles. So price comes here, give us liquidity, and then drops down. So after price has reached here, this is the area we are selling from. But remember, we have gotten it on the 3 hour. So we shall wait for price to come back to our zone, and then we shall be looking to sell. So you just mark it here like this, like that, and then you'll be looking to sell. However, tracking it will be on the daily or the 4 hour. I think the daily will be better. You have to be now patient. After realizing that now you have got a new trade, you have to be patient. And you see how, guys, you see how we have refined this. I want you to see the difference in the stop loss. You remember the previous stop loss was at 80 pips. Look at this one, 42, half of the pips, because we dropped to lower time frame, half of the pips. Now after refining to half of the pips, you would now hold your position to the last take profit, which improves the risk reward to 1:10. I hope, guys, you get my point. I hope you got the point clearly. If you have not understood the video, just go through the video once again and rewatch it. You'll get to understand the point. So now we shall go back to the weekly time frame. Remember, we have been dealing with this trade here. Now let's go back to the weekly time frame and we start dealing with this trade here. However, that trade to play out took how many weeks? 1, 2, 3, 4, 5. It took 5 weeks. That is 1 month. You would hold that trade for 1 month to get around 450 pips, which is a good catch. Not many people get 400 pips in 1 month. Good risk to reward. You'll be so profitable. So let us proceed. So now, what do you see here? The same thing that happened here, guys, is the same thing that is happening here. The same thing that happened here. You see, there is a bullish candle, a rejection, a hammer, and then a bearish engulfing marabuzo engulfing candle. Then after, we started with this candle here that goes to retrace into the supply zone that we have been seeing, then comes back to give us these pips here. Same thing. The same thing that happened here. You have a bullish candle, an indecision candle. This one, now this one is a inverted hammer, indecision candle, but inverted hammer. This one is an indecision candle, but a penny bar. A penny bar signifies change in trend in most cases if it's happening at a significant area. Let's start a supply zone, and this one is in this supply zone. And we see a penny bar and then a bearish candle which engulfs the previous two candles closing below them. After, we see price that this candle, last week's candle, comes to trade into this supply zone. It is trading into the supply zone and then it rejects and comes down. Same thing this one did. Traded into the supply zone and rejects and comes down. The following candle was an indecision candle which went up, down, and then stopped like that. And look at the drop, guys. It is the same thing that is happening here. Price went up, and then traded into this zone here. After trading into the supply zone, price created, let me just remove this thing. So after trading into the supply zone, price created same pattern here, evening star, green candle, a bullish candle, indecision candle, marabozo candle, engulfing the previous two. Then the next candle went up, but because of the selling momentum that was here, it closed as inverted hammer or a rejection, a big rejection. Same thing here, bullish candle, indecision candle, and an engulfing candle that looks down. Then the last week's candle went up, retested into the zone, and closed as a big rejection. Are we together, guys? And now see what is happening. So I just want to mark this area, this demand zone, such that we can go down to the previous lower time frames and see what is happening. So I've marked my zone very well, like that. So we drop down to the daily. When you go to the daily, what do you see? You see that there was a demand zone here, a supply zone here. What is that supply zone? Price was going up and then it dropped with a marabozo candle engulfing 1, 2 previous daily candles. That is a significant move. Engulfing previous 2 daily candles is a significant move. However, here it was not that clear. So what would you do? What would you do then? You would go to the 4-hour time frame or lower time frame to look for areas of refined supply or demand. So in this case, it will be refined demand. So this is the area we are refining demand from. Supply from there. Oh, I forgot one thing. We had to draw put our blue line in the wick that was going to reject. I think it is this one. Okay, put our blue line there. So we drop down and the blue line starts from there, but I think this one has not yet tested. Why? Because the Friday is the one that tested into the zone. So if you come to the 4-hour, this was the refined area. You see the drop 1, 2, 3, good drop to the downside, and then price try to retest back in that same week. So on Friday, this one happened even before the retracement. On Friday, that is when price tapped in. You see that was Friday at around 4 a.m. That is when price tapped in and started dropping, and from then it has been dropping. So what we can do here is look for supply zones here around this level. So we just drop down to the lower time frames and see if you could get a zone. However, I don't see any clear zone. The only zone I'm seeing is this one here. On the 1 hour it is there now. On the 1 hour it is there, so just mark this whole zone like that. It was already tapped in on the 1 hour. On the 1 hour the zone was tapped in, so this one was already used. So the trades have been happening while we are away. And why is this a good demand zone? Look at this engulfing bar, guys. I think no one would tell us that this displacement was made by retail sellers. This is an engulfing bar. So price retraced, tapped into the zone, and look at the drop to the downside. So it has moved. If I just come to the 4 hour and put my this video is now long and I'm just on one pair. I wanted to tap on 2 pairs. So if I come to the 4 hour and put my position size calculator, risking 17 pips and targeting 77, that is 1:4. And so far it is 1:4.5, that is 80 pips to the downside. So guys, I think you see how you can move from the weekly to the daily to the 4 hour, even to the 1 hour time frame, trying to get your trades. However, the only thing you have to do is identify the candlestick pattern and price movements on the weekly time frame. So I'm going to go straight to the other pair, that is USD CAD, and then I'll show you the same thing that has been manifesting for this pair. Now you guys, if you are all observant, before I even say anything, you guys can see what is already happening on the weekly time frame. This, if we have understood the previous analysis I've given on USD Chief, you can see what is trying to happen on USD CAD. If you have understood the previous video I've analyzed on USD Chief, you can see what is happening on USD CAD. So what happened is, first there was a drop, and then there was a demand zone, a supply zone here. There's a supply zone here. Price was supposed to come. Remember the other evening star candlestick pattern I showed you there. This is a bullish candle, an incision candle, and a Marabozo engulfing candle. So this candle was supposed to come and tap into the zone before it can drop. However, it did not tap into the zone. The candle that tapped into the zone is here after like 4 weeks, after like 5 weeks, 6. The candle that tapped into the zone is here, and it dropped. So we are expecting to target which low. Now this is where it becomes interesting, guys. I want you to look at this analysis very well. Where is the target? The target is this low. We're expecting to come and sweep out this low. However, how do we reach here? Now that we have tapped into the weekly supply, we have a possible daily supply zone. So this one is going to be here like this. You see, you're going to mark out this. We're going to mark out this area. This is an evening candlestick pattern. The same thing that happened on USDCF twice. It has happened here, but this was not tapped in, and now it is happening here. This is an evening star candlestick pattern, a bullish candle, and then this one is a rejection candle or an indecision candle. Let me just extend it. You see, this is an indecision candle showing you that price tried to go up, but the sellers were so powerful, so pushed price down and it closed as an indecision candle. Let me use my pen tool. Price tried to go up like this, but the sellers were so powerful. After reaching this supply zone here, the sellers pushed price down, and this candle closed as an indecision inverted hammer, with a very big wick to the upside, showing you a very big rejection. That one only signifies that we are going to have more, we are likely to have more sellers this week than buyers. Guys, you get my point. If you see this huge rejection, let me show you an example here. You see this huge wick rejection to the upside. this one was showing you that we are likely more to have buyers in the next week than sellers, because price rejected these price levels down here. And you see what followed after: green candle, indecision candle, green candle, green candle. I hope we are clear up to that. Let me just clear this. I hope, guys, we are clear up to that. So if whenever you see a huge rejection on the weekly, it might show you that the next week we might have huge sellers or buyers, depending on which kind of rejection. So there was a huge rejection up here, and you see what happened: price tried to go up the next week, but it failed, and it closed down as an engulfing candle. So after closing as an engulfing candle, this is the area that we are looking to sell from. So what do we want? We want this opening candle now this week that has opened today on Monday to come, and take your time, guys, to watch this video, to come and tap into this supply zone here, and we sell up to down here. So we want this candle that has opened. That is the ideal scenario we want, but this candle can just decide to drop down. However, what we want is this candle that has opened to come up here, tap into the orders that are here, and then sell up to this low. That is what we are expecting. Can it happen 100%? No. But is there a possibility for it to happen? Yes. If it happens, will it play out? It will play out. Don't expect price to buy and continue buying from here. No. We shall tap into this area and then come down here. Remember, guys, this is a weekly thing that we are dealing with. So let me just clear this, and you can rewind and go and see what happened on USD guys. You'll get a clear picture of what I'm telling you. So this is the candle that we are going to mark. This candle here, this is the one that we are going to mark opening price, and then with the high that it reached previously. So after, we are going to go down to the daily time frame to see where we can refine our zones. Now this is where it becomes interesting on the daily time frame. People who trade people who know about candlestick, people who know about chart patterns, and people who do what? People who trade QM patterns. You see, this is a high, a low, a higher high, and this is looking like a lower low. You know this formation, guys, you know this formation of high, low, higher high, lower low. Then we come and make a QM pattern here, so we are likely to see a return and sell from that area. So it is selling from that area, it is also creating a head and shoulder. Are we together, guys? It is creating a head and shoulder and also a QM pattern. And also on the weekly, it is testing the weekly supply zone. You see how we are gathering all confluences, putting them together, putting a lot of confluences together in order for us to make a significant decision. So now we have a high, a low, a higher high, and this is likely a lower low. So this is like a QM. And where is the maximum pain level? It is around this area. And also around this area, that is where we see a supply zone. Around this area, that is where we see our supply zone. This whole candle here, a supply zone. And also, if price comes back to that area, it is going to be making, where is this thing? It is going to be making a head and shoulder. Let's say price started and came back into this area here and then dropped down. Isn't that a head and shoulder, guys? Let me bring you the line chart. What are you seeing, guys, on the line chart? What are you seeing on the line chart? A clear head and shoulder, and this is a daily time frame. A clear head and shoulder, high, low, higher high, lower low, and then when price comes back here, there is a supply zone. So price is expected to sell from this zone. Clear head and shoulder pattern. So you are selling from this area. People don't say head and shoulder. I think now it is clear. It is clear. Clear head and shoulder, maximum pain level, sell from there, and then price drops massively. That is what we expect. Let me come back to my candlestick charts. So guys, I think now you see what I'm telling you. So this week that has opened today, we expect whatever price is going to do. I expect price to first come down here, clear this low here. If it clears for me this low up to here, then I'm going to be 100% sure that price, when price comes back to this area here, we are selling massively. And I want you to see the target, or where we are going to be targeting. So if price comes back to this area, and I know it might come back up to this area and close as a rejection. If price comes back to that area and then taps us in and then comes back here, you see the pip count, guys, we are targeting over 1:4, 274 pips to the downside. 270 pips to the downside. That is what we are targeting. Now the stop loss is 60, so we are going to go down to the lower time frames to refine our stops. So this is daily time frame. I wish this candle can come down here and clear this area. That means we have broken this lower high and made a lower low. Definitely will be selling from this area. So if you come to the 4-hour time frame to refine the zone, this is what you get. You're going to, where is it? It is here. So you're going to come up to, I think this one, this should be okay. You don't have to go beyond that. So refined up to there. Now that is going to be your supply zone. So what is going to be your stop loss? In this case, why is it? In this case, your stop loss is going to be only 30 pips. But I think 35 would do. 35 pips. 35 pips, and you're targeting 270 pips. That is something that is huge. So stop loss 35 pips, the target, first level target 200. So that is going to be a 1:8, targeting 200 pips, 280 pips to the downside. So that is the ideal scenario that I expect. However, I wanted to enter from the opening price of this opening price of this red candle here. That is where I would prefer to enter from. Why do I prefer to enter from that? Because price might decide to only test the opening price and it can drop. It might decide not to go up there. So after refining there, I'll just come. I think now this one, the first entry makes a lot of sense because it is on the opening price. So that one makes a lot of sense. Price to come and tap into this area. And you see, guys, we are dealing with precision here. Price tap into this area. Now the stop loss is going to be around 47 pips. There you go. So this one makes a lot of sense. Price might not want to reach up there, but only tap into this zone and then drop massively. So there you go. Watch out for this end. And this is also a drop, a drop on the 4-hour time frame. So I think, guys, you see how things are lining up. So we shall come and test this area and drop. This is going to be one of my trademark trades. Mark this video very well. One of my trademark trades. This is a drop, a base, a drop. This is an engulfing candle, engulfing 1 2 3 4 5 candles. 5 candles, guys. Just one move engulfing 5 candles. That means there's a lot of sell momentum from this area, and that area also coincides with the daily shoulder. This daily shoulder here, you see that shoulder, daily shoulder. So if price comes here, it's making a mini head and shoulder to the downside. So I think this video is already long. I don't want to take it any longer than it is. I'm just going to end there, and I'm going to request you guys watch this video carefully and closely. You'll understand what I'm talking about, and you'll be able to know how to exactly trade. We'll set setups and wait for them to materialize before you can execute them. If you really watch this video well, then you're going to know why you are entering a certain trade. So I think that is all for now. I don't think I'm going to go beyond that. That is all for now. People who are watching but have not subscribed, kindly subscribe to the channel. People who have already subscribed to the channel, if you have found this video useful, kindly like the video. Don't forget to like the video. It helps us so much, and it's also going to help the video reach other people who would want an educational content for their trading careers. So I hope this video has been useful. Thanks everyone. We shall meet in another one. Peace.